Man, oh man, oh man. Look at this market through here. This market is actually holding here right now. After spending years and years and years holding this support level, it's breaking down. Now it's holding. This could be getting ready for a really big drop to come. Also, look at the NASDAQ. The NASDAQ is actually forming a big, massive head and shoulder formation here. Is this the top of all tops before we actually start to see? And is this a bit of a bear market rally? According to Ray Dalio, this is an article that I actually put together for my Inner Circle members. All through here, this is an article about what happens in the early stages, the top, what actually happens, and also the debt. And according to this report that I put together, thanks by my help by Chat GPT to help me put this together here. Right now, according to Ray Dalio's Big Debt Cycles, we are here right now when it comes to that air. But I'm not gonna. That's not a bad thing. I want to share with you reasons why. But also, I'm going to talk to you about why this is an absolute comparison. I went through and I actually did some comparisons, 1929 to now, 1970s to now, 2008 to now, and the biggest thing here is this 1929 to now is the absolute split image. Absolute split image. In fact, out of this level through here, as you can see, we have 1, 2, 3, 4, 5, 6 points. Out of the 6 points, 5 are definitely happening again right now. So are we now getting into a 1929 style depression really soon? I want to walk you through all that in today's video. Plus also, I want to answer a question from someone that actually put something on my Facebook page of my comment just recently about retirement, long-term investing. If you've got large large investment accounts, but you're getting close to retirement, you're very fearful, very worried. I'm going to cover that at the end of the video. I've got a really long question that I want to answer. And hopefully if you guys are a bit more in the retirement age or getting close to that, but you're scared about what's going on, rest assured, Johnny's here. I'm going to really help you out, okay? So guys, do not place a trade based on what you're seeing in this video. There's no guarantees of what I'm saying is going to work out. I'm just giving you the best I can from the knowledge I have. And it may or may not work out from there. Also guys, if you do need some help, I've put together a massive trading course to really help you out. Biggest mistakes, chart reading, trading system, so much more. And I know that trading courses is for free and it's going to help you out there. So let's actually start off here. Firstly, I want to start off with the good old oil market. And the reason why I'm doing this here, guys, for you is because, let me start off with this here. This is the oil market here. And one of the really big things I've learned over my time and over my trading career is that, firstly, I'm always looking for trades that's likely to make a big move. Okay, that's the first thing. I'm not looking, it's a different level of thinking. Okay, and I want you, if you want to start to elevate your trading results, elevate your thinking. What does that mean? Stop looking for trade that's likely to make you $20 a day and start looking for a trade that's likely to potentially make you $5,000 in a month. What does that mean? That means you're not going to be taking a lot, but you're going to I'm looking for that trade that's likely to make a good move. And if I can apply some leverage, margin, stop losses, options, and so on and so forth, that's what's going to elevate it, right? So it's a different level of thinking. Like for example, like right now I'm in 3 trades right now. Every single one of those trades that I'm in right now, 2 are in profit and 1's basically break even and it's about to go into profit right now. Right, so I'm in 3 trades right now. And again, I share this all with my Inner Circle members and so on and so forth. Guys, if you want to learn how to identify these opportunities for yourself, you need more hand holding, then go to getjohnswap.com, that second link in the description there, and go fill out the application form, guys, and I'll speak to you. If you really want to get your hand handled on this, by the way, if you don't understand this, you are literally missing out on opportunities, right? Now, you're just missing out on so many opportunities. Now, the purpose of saying this here is I want you to be thinking differently. Okay, stop looking for short-term trades and look for get into trades that's and that's how you start to do really well long-term. But looking at this here, and one of the best things I do say when it comes to my trading is whatever the weekly chart is doing, go with that. Well, what do I mean by that? So many people are trading with their egos, with their thoughts and their opinions. To me, one of the things that I've learned is the power of the weekly chart. Now, you know the analogy, the trend is your friend until the end. The daily charts, the hourly charts, these time frames here can give you short-term swings, short-term trends. But the most powerful trend I want you to be focusing on is the weekly chart. Okay, we can apply moving averages as well too, but for now, let's just focus on the chart itself. And I'm telling you right now, if you can just do this, you're going to be on the right side more than not. You have a 50-50 chance from the get-go. Apply this one simple technique, which is whatever the trend is at that time of that particular market on the weekly chart, look for signals to go with that, not against it. because most of the time you're going to be wrong. And if you're right, this is where you start to get into small profits, big losses. And that is, where is the trend of any one particular market? Now, there's two types of trends, right? There's uptrends, higher lows. There's downtrend, lower highs. And then there's no trend. This here, what? Don't trade through here. Why? Because there's no trend. There's no probability of it going to go up or down. Stay away from that. This one here, this one here gets the tick. This one here gets the tick. Why? Because we're trading with the trend. So the first reason why I'm saying that is that in an upward trend, as you can see through here, this is a weekly chart. Up, higher low, higher low, higher low, higher low, higher low. So all through here, it doesn't matter what you think, doesn't matter what you hope. If you actually want to do really well, the probability is that if we have a trend on that weekly chart and it's still forming these higher lows on the weekly chart, you want to go with that. Why am I saying that for? Because one, I want to give you the best chances of having a successful trade. So go with that, right? That's like it's like a wave, a big wave with momentum. If there's a really big wave coming and it's building momentum, and you know it's about to break and it's about to really push the surfer down the wave, do you think the surfer's going to have a really good time going against that? He's going to get crushed. That's what a lot of people do, right? They try to short it here, short it here, short it here. Just flip it on its head, right? And it's really interesting. So now, for example, look what's happening here. Some people I'm seeing now calling for $100 oil. You may be right, but that's your ego. No one knows what's going to happen. What's going to give you the best chance of knowing what's happening? What is the trend right now on oil? And as you guys know, right, I've been bearish oil this entire year, and actually probably a lot longer than that. High, and why have I been bearish? Lower high, lower high, lower high, and we broke down, and now we're doing this here. We're probably going to get another lower high and break down. Make sense? So that's one of the reasons, and even all through last year, I was bearish oil here. Why? Because the trend was still down. If the market goes down and rallies up, lower high, market go down. If we rally up through here, that's the last high, right? This still could be a lower high here. And a lot of traders get sucked in by this rally here. But look at the big trend. If we don't break past this previous high, we could go down, back up, lower high, and away we go again. Make sense? So looking at oil is that we're starting to develop this sort of pattern through here, breaking down. We are in a high, lower high, lower high, lower high environment, and now we're breaking to the downside through here, right? And now we're just holding through here. So oil, and just like this is oil, but also the energy sector as well too, both those markets are going to get crushed. Now, as I said before, traders, there are so many opportunities all around the place. There's individual stocks, right? So like, for example, right now, I'm short one stock and that stock's about to absolutely just get crushed. That could be a massive profit for me, right? A massive profit over the next 2 to 4 weeks. Massive profit that I could be in on that one there. And then the other two trades I'm in right now are long signals. And I'm long 2 stocks, and both of those longs, I'm actually in nicely profit. And it looks like, and it's just getting started right now, right? And so I'm trying to share with you that I want you to have a really good trading setup. So when these setups appear on individual stocks, the stock are gonna, you can actually start to see that there, right? Again, I teach you all that for free in my trading course, guys. Okay. So just go learn what to look for. Don't be hoping and guessing and so on and so forth. It's just you are not being professional if you do that. I'm pretty sure you know that, right? So that's what I wanted to share with you when it comes to that through there. Now, looking at the NASDAQ, the really interesting thing about the market where we are right now in the big cycle of things is, are we forming a big, massive head and shoulder formation? Because if this is a big, massive head and shoulder formation, and if it is one of these, which we, as you can see, the exact same thing that happened last time, right? What happened last time? Last time we actually had a peak. We had what? We had a high, high, high. And then we had this more like here, and then we started the downtrend. High, 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 and then more like down through here. Now, here's the really interesting thing about what I just said there. This is where it gets really, really awesome, right? I've been doing some research, as I said in the video. I've put together this report here for my Inner Circle members. I won't go into all the details here, but the big thing I really want to share with you is that according to Ray Dalio's 3 major phases that goes into things, right? So we go through the early stage of what actually happens, then we go through the top, then we go through the depression or something like that, right? So you have the 3 stages. Then we go through to what's happening right now. High interest rates and inflation, right? Rising debt services, what's happening right now. So we're going to, where we are right now in the middle of 2025. Based on these indicators, high interest rates, this one here, right? Recession indicators, we've got going through here. You can see here the stock market and asset prices. This is typical late cycle and echo boom, right? Where investors bet on soft landing and policy reversal, right? This one here also geopolitical. But basically, in conclusion, we are in the big debt cycle, likely at the transition point from the top to the deleveraging phase. In Dalia's terms, the central bank is caught between high inflation in some areas anyway, and the economy is slowing. Debt burdens are high, and a tightening cycle has occurred, which comes typically next a contraction from there, right? And then we go through here, but according to this massive thing, see this red dot here? This is where we are right now. Now, as I was saying at the start of the video, that I did some accumulation here, thanks to the good old AI, helped me out with this. ChatGPT, right? I put together some similar. So I asked ChatGPT, show me some similarities between 1929 and right now. I want to see side by side. Because why? Ray Dalio says in his Big Debt Crisis, the same things happen again and again and again and again. Nothing is new on this planet. And the further we can look back in the past, the further we can look back in the future. I've got his Big Debt Crisis, but also thanks to this. So I wanted to see what was happening back in 1929, right? Because 1929 was what? A depression. By the way, I believe we're going to start to go through that in the 30s, okay? But 1929 and right now. 1970s and right now. 2008 and right now. Okay, and then also we have all these different, this sort of image here. But let me take you back up to here, because this is the main one I really want you to focus on. Check this out. This is where it gets really, really, really awesome. So back in 1929, what happened, right? The first one here. Extreme asset price bubbles, stocks and real estate. Right, this one here. Similar tech-driven asset bubbles, high valuation, and weakness fundamentals. But we also do know what? We also do know we actually had an incredible boom over the last couple of years, right? 2022 to now. We know we had a stock market go boom after COVID, right? We know that. But also what's happening in the commercial prices right now, commercial market. A lot of defaults, right? So a lot of defaults are happening through there. What about this one here? So that's number one right now. Number two, happening back in 1929. Massive debt build up, margin debt in 1929. What has been the number one thing that's happening right now? Massive government, corporation, and consumer debt. That's happening right now. It's the same thing, right? Side by side. Like, oh my goodness, look at this here. Massive. And we know the government, right? It's like what a quinky dink that right now in the big massive cycle of things, that Doge has started to come into it, right? We know corporate and we know the consumer debt. This one here, Fed raised rates into a fragile economy. We all do know where the last couple of years, Fed has raised rates into what? To combat inflation. What has that done? Right, this here, Fed raised hike rates into visible weakness, risking a downturn. What did the Fed do? They raised interest rates into high inflation. And that simply means what? Not only did we actually get high interest rates over a period, of course, of them raising the interest rates, so then it's a debt burden on homeowners, people that have got short-term, debts and so on and so forth, and they're paying the short-term interest rates and so on, and the interest rate and so on and so forth. Or they're paying the interest rate. Not only that, from that perspective, but then we also know we had high inflation, but we also do know we had property inflation and also rent inflation. So as we know, a lot of things rent inflation, but that inflation really hasn't come down. We've had a little bit of stuff come down, right? But I know where I live, rents haven't come down. Rents are still at just massive booms up there, right? Step number, this one here, 1, 2, 3. Number 4, wealth gap at historical levels. Wealth inequality, what's been the number one thing we've seen in the last couple of years? Last couple of years, like what? The wealth inequality, right? The wealth gap, the rich are getting richer, the poor are getting poorer, so on and so forth. This one here, weakening trust in capitalism, political, populism, and anti-establishment sentiment growing. We do know that there's a whole big rise basically against the whole what's happening right now in the system and so on and so forth. Anyway, so this one here and this one here, we have deflation after burst. Inflation initially surges, but deflationary risk may return with this one here, right? Key insights. Like 1929, there's a strong risk of credit deflation and a sharp economic contraction. If policy missteps occur or asset bubbles burst too violently. And then we can go through that through there. So we can see through here, the really big thing is as we see what actually happens here. Now, the reason why I'm bringing this up here is because it's going to go into the question I'm going to answer very soon for this particular gentleman. But the reason why I'm saying this is one, that firstly, just understand where we're at. The most important thing we can do is what? See things as they are. Learn from this sort of stuff. So as we go in through if we are going to really hit the recession hard over the next 1 year, which I do believe over the next 1 to 2 years, we're going to be in the thick of the recession. I say 1 to 2 years. The recession the top might be starting now. And then 2006 might be the big down year. We may be forming the top right now and it starts to slowly make its way down, right? Because it takes time to make the top and then it takes time. 2008 stock market crash was formed by, as you can see here, if I go to the Dow Jones and I go back to 2008, you'll be able to see what I'm saying here, right? Look at this here. So 2008 stock market crash, which was this one here, as you can see, it takes a good 6 months or more to what? Build a top. And then we have a 12-month drop to the downside. So this is what we may be doing right now. We may be here right now, starting to build this top through here. And then maybe we're starting to see that right now in the markets. So the whole thing about this is one, understand where we're at right now. Secondly, don't be afraid of it. You can trade leveraged, you can trade reversal ETFs as the market comes down. You can trade that. You can trade things like put options. So as the market's going down, you can buy put options. And then as the market goes down, you can increase value from there. But then also, there's going to be incredible actual trading type of setups, right? And this is where it's so important, guys, especially right now, over the next 12 months or so. If you are not educated around understanding how to identify opportunities both for the bullish side and the bearish side, where the markets are likely to go up and the markets go down, and really identify these amazing trading patterns, you are literally leaving millions of dollars on the table. I always say to my coaching clients that over the next 10 years, there's going to be at least $1 million worth of opportunities that's going to pass your plate, and you don't even know it's there because you're not educated, right? And this is a really, 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 really big thing. And whether it's my stuff, getjontop.com, that's an application for my coaching. Join my coaching, I help you every single day. But if it's not my stuff, guys, really get focused on one type of trading setup. I promise you, it's going to really, really help you out. Hey, it's helping me out right now, as I said before. I'm in 3 trades right now. 2 are really nicely in profit, 1 break even. Just really, 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 really nice trades. Once you know how to trade these markets really, really, really well, right? So that's what I wanted to show you through there, and looking at all these different markets from here, guys. Looking at S&P 500, same type of thing. We could be developing this massive rounding top here. Again, if the overall cycle of things are going to start to form in here, Paul Tudor Jones actually says that we're probably likely to see a movement on the downside, and we're probably likely to test new lows. If that happens, if we do test new lows, like Paul Tudor Jones says, oh my goodness, if this happens, and we do that, this is going to be the start of a 1999 depression, right? We're seeing everything fundamentally line up. All we now need is start to see the technicals start to show the picture, and then away we go, right? So we need to just keep an eye out for that and what's going on from there. Let's go down to gold. One thing I really want to sort of share with you guys when it comes to the to the actual gold. If you're short-term trading gold, keep this in mind, right? The market goes in swings. So keep this in mind when you're trading. Firstly, weekly charts. All through here, I was telling people that this bull phase here is going to come to an end. I didn't know whether we're going to go through a big crash or whether we're going to do what we're doing right now. Here's the thing though. If you're a short-term trader, you're going to get in and get out on a couple of days basis or a week or so. Just understand the different phases. These here, well, let me actually bring up a daily chart here, right? So this is a daily chart here. There's different phases here that I really want to sort of share with you that help you out to understand this thing here. There's different phases. There's the energy using phase where the market's trending, and trending, right? There's the energy using phases where it's using energy, it's buying it. We're using energy. Then when the market's going sideways through here, it's building energy, and building energy, right? You see this big stair steps. It's like a fuel tank. You go for a drive for a while, you run out of fuel, you need to stop, and you need to go fuel up again. And once the tank's full, we gotta go for another move, and so on and so forth. Now, here's the thing that I do say about these energy building phases, is they are the worst time, and this is where identifying what phase you're in right now. So if you're short-term trading gold right now, on a daily chart, it is the worst time. Because there's very low probability. Are we going to break up or are we going to break down? Because what actually happens in these energy building phases, right? Look at this here, right? Volatility. Look at this here. Up, down, up, down, up, down, up, down. Look what's happening now. Up, down, up, down, up, down. This is the worst time to be trading right now. Now, again, trading is, you're looking to get in today, hold it for a couple of days, maybe hold it for a few weeks. Right now, this could just continue on here for a while, and this is the worst time. The best times to be trading is this. Firstly, we have an energy using phase. Then we go through an energy building phase. And one thing I found is that as soon as we build this energy building phase, as soon as we start to break above these highs up here, like there, after building this energy here, as you can see, here's the time to start to look for trades. Here's the time to start looking for trades. Here's the time to start looking for trades. Here, now this is trading, right? If you guys are buy and hold gold, this has got nothing to do with you guys, right? Buy and hold has nothing to do with technical analysis. Buy and hold is more about macroeconomics. But as a trader, if you want to be able to get in on that next big move or that next move or the next momentum spike, then don't do it when this here. Wait for it to start to break above highs. Start to break, look at this here, right? Start to break above high, perfect time to be looking for a trade. Break above the high, perfect time, break above the high. So right now, if we start to go, we're going sideways right now, wait for it to start to get above 35,000. If it's going to hold here and go for another move, this 3,000, this over here right now, which is this one right, let's go to here. Right, this one right here, as you can see. Ooh, there we go, right? What you want to do is this. We're going through this, let me try that again, right? There's the phase there, right? There's the phase there, and there's the phase right now, right? As you can see, every time we start to, I'll do that a bit better so you can actually see what I mean through there, right? Right, all through there, as you can see, all through here, and then we'll get the same thing all through here, right? As you can see, as soon as we broke up above through here, it's telling us we're getting ready to go again. Broke above here, we're getting ready to go again. Wait for a break above here first to say that we're likely to start to go for another move here right now. If you're trying to go long right now, this could either do this or this could actually start to do something like that, right? So this is the big thing you really want to be sort of focusing on and keep an eye on when it comes to all of that in the markets right now. So this is what I want to do right now. That's the technical analysis and the market updates things. I want to answer a question for a particular gentleman that I just recently saw. And I believe what I'm going to do right now is I'm going to really help this particular gentleman out. I'm just trying to make sure I take a big screenshot of this here. So it's, just bear with me for one moment. Okay, again, I'm just making sure that I take a screenshot of this to make sure it is all good from here. Okay, cool. So this is the question that I have from this particular gentleman. I'm going to really help you out here, okay? So this is really going to help you out when it comes, especially between you guys that right now it can be tricky, right? Especially if you're less than 5 years or 5 years away from retirement, like this particular gentleman, it can be quite tough, right? I completely understand, and I understand that, especially if you've got like $1 million or a few $1 million and you're worried about losing it all in the next big crash. Firstly, your thinking is right. You know what I mean? Like you're starting to sense something's not right. So you're doing the right thing here. But let me go through this little comment here that I got from Burgerman14. And I'm doing this here because, again, for you guys that have got much more larger accounts, you're not just looking for, there's trading opportunities and there's investing opportunities like this here. So let me just read this through here, and then I'll give you my thoughts on this here. He says, thanks for your comment today on long-term investors. One problem that many of us have who are long-term investors is that you lose a lot of value in the crash or the bear market that can take many years to recover. Exactly. You're right. You're exactly right. Especially where you are right now in Europe. For example, in February, I got out and then I got back in before the tariff pause. So it worked out great for me. What you're doing right there, Boogerman, is short-term trading. That is not investing. You're not a long-term investor if you're doing that. You're actually looking for short-term opportunities. Now, if you want to go down that path, Boogerman, I'm your guy. I can help you right? This is where my coaching is going to come into it. Yes, you need to invest in my coaching, but I can help you identify these really good opportunities. If you want to go down that path of, I got, for example, in February, I got out and then back in, so it worked out great for me. Yes, you are right. Right, it did work great for you, but you're now going down. You're now going to the trading mentality. A buy and hold is you're buying it and just let it go. Who cares what happens on the short term, right? If you want to go down the path of looking for shorter term moves, like the trades that's likely to last a month or two, and you're looking for that type of trade to help your retirement, I'm your guy. I can really help you out. Just book a call with me. Again, that's second link in the description, and then I'll be able to speak to you about my coaching, and I'll be able to help you scan the market, learn how to identify these opportunities so you can actually see them not just in the markets, but in through all the individual stocks, right? So, but don't mix the two. There's two different things here. Long-term investors, you're not long-term investing right now. You're short-term trading. That's what a short-term trade is. Even a few months is a short-term trade. If I'm retiring in 5 years and the next 2 years we have a 50% drop, I'm in trouble because that could take years to recover from. That's why I'm so on edge and sitting in cash a lot. That's actually not a bad thing. Especially right now, right? Especially right now where we are. That's actually not a bad... right? That's not a bad thing. Did I just... Let me see if I can do this here. Right? Oh, that's... Yeah. That's not a bad thing from there. Right? I just deleted that screenshot. Right? So that's not a bad thing. And so... So here. Where was I? If I'm retiring 5 years from the drop, I could be in trouble because it could take a cover from. That's why I'm so edge. I'd rather wait till a large drop to enter the market. Yes, and there's nothing bad being in cash a lot and waiting for that, right? Again, it may or may not happen. As you know, it may not happen. And I can really empathize with what you're saying here, right? It must be tough on you right now. I can really understand the situation right now. I got divorced in 2017 and lost half my retirement money. So it's been tough balancing between trying to make gains and preserving my money. One of the biggest things here that I'm seeing right now with you, Bergerman 14, is there's a lot of guesswork. You're trading based off there's a guessing work. Long-term investing, even if you're looking for good opportunities, is about like having good risk management on your portfolio, looking for good buying opportunities, right? All that sort of stuff. It's a system, it's a process. For example, like what you've done in the last couple of months is more like a trading approach where you're getting in, holding it for a month or two and having a nice move from there. That's more of a trading approach. The biggest thing for you is that you're not educated around how to identify these opportunities. You wouldn't be worried about the big bear market that's coming if you were educated around the market that's going to have a drop. Because if the market does drop, there's ways of actually benefiting from that as the market goes down. So one of the biggest things, whether it's your long-term investing or your short-term trading, is you're going out, it doesn't sound like you're going on any system at all. You need a system, you need approach. The way that I do really well, Bergerman, right now, right, is it's not that I'm guessing, should I be in now or I'm going to get in now. It's like, if you're guessing, there's no system or method to your reasoning to you doing things. And so of course you're not confident because you don't have any education and proper training and mentoring behind identifying this. So yeah, if you're not careful, if you keep trading the way that you think, you did, you got it right, you got lucky by buying the low. But what happens if that tariff thing end up being a lot worse than it is, and it really started the 1929 depression, and it really and we had a 40% drop. Then you got it wrong, and then now guess what? Because you traded based off what you think and not just not good techniques, you would have been wrong. And I guarantee you that's what's probably going to happen next time. If you get in based off what you think is a good idea, you may be right every now and then, but it's not a way to have a sustainable. The reason why I make money every single year, and I have done for a long time, is because I stick to the same techniques, the same system, the same entries. I hope that makes sense from there, right? So if you're not educated about what you're doing, and it seems like you're even from your long-term investing to your trading, it's not good there, right? It's almost impossible at times. Well, it's impossible, once again, it's impossible because you have no idea what you're doing. You're working a lot of guesswork. So while you're right about making a lot during a crash, it's all about timing, which is near impossible. Again, and same thing here, right? You're trying to guess when a good time is instead of having a proper system. Because I know for me, Bergerman, even from a $20,000 or a $30,000 investment for me, one really good trade could make me multiple six figures in one really good trading opportunity, of course, a few months. Right? And I'm talking about this here. I'm trying to show you that you don't need that. You have $1 million trading account. If you knew exactly what to look for, even a $10,000 or $20,000 trade, a trading opportunity, potentially maybe using a bit of leverage or whatever, could actually benefit from you quite nicely from doing this. right? And so again, you're working on the big thing for you here, and you are going to lose a lot of money. You're probably going to lose a lot of your money right now because you're working on your emotions, you're working on your fears, your doubts, your thinking, and you're not working on an actual solid plan for the rest of your life. I can't write down a 50% drawdown and expect to retire in 5 years unless it's a quick recovery for 2 years. Exactly, right? Exactly. But who said you need to write that down? Who said you can't take positions as the market's going down? Because you got, firstly, this is your lack of education, Bigerman. Your lack of education, your lack of training, and not even know how to read the market properly, understand the markets, is going to cause you to, potentially not only, you might lose a lot of money, but you're going to be missing out on millions of opportunities, because there's ways that if the market starts to go down into a bear market, you could trade like reverse ETFs and so on and so forth. If you know what you're looking for with good risk management, you can not only protect your account, but know how to identify these opportunities. So you might be risking 2-3% of your account to potentially have a 10 or 20% growth on your account. There's ways of doing this here, but you've got to know what you're looking for. You've got to know exactly how to understand this sort of stuff, right? So I completely understand here. I see you and others suggesting gold, right? I'm not suggesting gold. I've been giving gold warning right now. I've been giving gold. Gold's already made a move. I agree. A lot of us do not have gold funds or commodities at all in our retirement accounts. I wish we did. No. You wish you had a proper system and proper training. Your lack of training here, again, the biggest thing I'm seeing here right now is you are getting in based off emotions and thoughts and opinions. That is not professional. You're doing the wrong thing. Professional is about having a proper, solid, foundational trading plan, trading setups and trading rules, and then you go approach the markets. Make sense? So this is what you do. So no, I'm not suggesting gold. For the last few months, I've been giving gold warning. Why? Gold's already made a big move, Bigerman. So big move. Gold has already had a big move. Even if we have another move up, we're getting towards the end. I agree. A lot of us do not have it. I wish we did. For myself and a lot of others, we get ETFs, mutual funds, such as a total of stock market, technology funds, a balance of funds, some targeted date funds, bonds, etc. Those are our choice. I love to have gold as an option or a dividend appreciation fund. When I heard you say a pullback is coming, I'm worried about the pullback going to April lows. And you know what? And so you should be. Again, just because the market goes down to April lows, so what? What happens if you look for, like, there's really good opportunities out there, right? And now, see what you're doing right now? Everything you're doing right now is based off your emotions. You are going to get destroyed in this market if you keep wasting your emotions. It's all about having low risk. Pour all your money out and have a low risk on positions. So if the worst case scenario, your account's down 10 or 20%, not 50%. See what I'm saying here? And then you have stop losses in place. But the number one thing for you is that you're just guessing. If you know, and this is the power of what I do as a coach, I teach you what to look for in a high, powerful quality setup. And even only that, but how to actually read the market and what's going on so you can position yourself properly. Again, this whole thing here is your opinion, choices, thinking, getting it right. No solid foundation, and you are going to get run over, I promise you, right? Because there's no solid foundation. And your lack of commitment to actually investing good money in a coach to really help you for the next, not only 5 years, but for the next 10, 20 years of your existence, maybe longer, you are not going to be able to get ahead. You're going to be missing millions and millions and millions of dollars of opportunities only because of your lack of education in the markets. And you're going to get run over. And if you keep trading based off your emotions, your thoughts, your opinions, your hopes, your fears are always wrong. And the only thing you can do to get into these markets is have solid foundation approaches. If it's long-term buy and hold, go down that path, okay? So I'm worried about April lows. I'd rather get out and get back in if we hit April lows. Really? So I'd rather get back in and then start to climb again. See what you just said there? Who said the April lows is going to hold? If that happens, who said that this is not the start of a big 60% drop in overall in the markets? Wow. You see the big mistake here you're doing right now. This is a huge mistake you're doing right now. Again, or if it goes to April lows, I'm going to buy it because it's going to go back up again. A lot of thoughts and opinions and emotions. No wonder you're struggling. Your lack of confidence is coming from a lack of not having a rock solid trading plan or a long-term investing plan. Or we could hit April lows and then continue dropping. Exactly. So therefore, you don't do anything based off a hope or a fear or emotions. You need to have a proper trading plan or a system for identifying good opportunities. And this is where you're right. I never thought 5 years from retirement would be so stressful. It's only stressful for you, Boogerman, is because you don't know what you're doing. You're not confident in your trading because you don't have any education. Well, you might have some education, but you don't have a proper rock solid trading plan. You don't have a rock solid foundation of doing really well. Right? So no wonder you're stressed. I'm not stressed. I'm loving these markets right now. Why? Because my trading plan is amazing. Identifying amazing opportunities that's not going to make big moves. And when I do have losses, I have small losses. And that's going to work in the bull market. It's going to work in the crash. And it's been working for the last 30 years that I learned from my mentor. I've been using it I've been trading for the last 20 years. My mentor's been using it for the last 30 years. Right? And so that's the reason why it's stressful for you. Your stress is coming from you spending all this time trading and none of the time actually learning what to do. Your education, you're trying to do this by yourself. And I'm not stressed. I'm actually really excited. And by the way, Biggerman, I can't wait for the recession to start. I can't wait for the stock market, the crash coming. Why? Because you make so much money on the downside if you know what you are doing from there. And I just deleted that again. Let's go again. Right? Let's go here again. There we go. Right. So let's continue on here. Where was I? Mutual funds. When I heard the pullback coming, April lows, I'd rather get out than hit it April lows. Or we could, yes. I never thought 5 years retirement could be so stressful. Keep in mind, none of us just have extra money to put in our 401. In the past April 4th example, I was already invested. So I either had the choice of rising it down or riding it down and up again, or selling in February, which I did, and buy it back towards the bottom. I am an investor, as you said. Well, no, you're not. You're not an investor. You've now entered the world of trading. Welcome to the world of trading. You exiting because you think the market's going to go down, and then you buying because you think the market's going to go up. That's you timing the market. That's you trading the markets, and that's you doing things based off emotion and what you think. That is a recipe for disaster. Disaster. I promise you, an absolute disaster. Right? You're not an investor. What does an investor do? If an investor sees a drop coming, and this is a big move up, and we do see a drop coming, the drop does come, but the investor knows that if they're in good quality companies, that companies like it, yes, we do get a drop, but then in a year's time frame, we're going to do this here. The investor rides these things out. They don't get in and get out and time the market and all that sort of stuff, because if you do, then that's when, again, no one can time the market. So you may have been lucky right now, but I promise you, 12 months from now, if you keep doing this lucky thing, not 70% of the time, your luck is not going to work. I promise you that. If you want to have less stress and you actually want to enjoy this and be excited about trading. Again, I love these markets right now. I'm having so much fun. As I said, I'm in 3 trades right now. 1's break even and 2 are really good goods in profit. So either I had the choice of rising down in February and buy it back. As you said, I'm an investor. I know what you mean about holding because I'm invested since 1997. It's only been recent as I approach retirement and worried about the large drop. I could not withstand that retirement. Okay, well, the best thing for you to do is the best thing if you can't stand that, cash is actually a position as well too. So that's actually not a bad thing being in cash. But this thing for you is firstly be in cash and then spend a good 3-6 months of getting hard into a mentor. If you resonate with me, invest good money with my private coaching and my inner circle. Because the money that you make has the potential of making you 10, 100 times the next 5 to 10 years. See what I'm saying here? Right? So, I hope you can see what I'm saying there. Again, it's only been a recent approach, large drop. I could not withstand that. I totally get your point about trading and investing. That said, I'd rather not be in a market if it's on the cusp of having a huge drop. There are guys like Chris Vimmer who also see any day now a massive drop coming. I guess that's where my fear is. And again, look what you're doing here. Your biggest mistake right now is you're watching a YouTube video trying to manage $1 million fund. Are you kidding me? Are you absolutely kidding me right now? That is the absolute worst thing to do. Do not be watching a YouTube video for an idea of what to do in the market. That is the worst thing to do. Because YouTube doesn't know, I don't know. I give you an update and technical analysis, and Chris doesn't know. Right? So that is the worst thing to do. If you want to be able to take your $1 million and potentially turning it into a lot more millions over the next 10 years, then get yourself educated. Stop looking for this free bullshit all the time. You're trying to make money from $1 million fund, but you have all your foundations, everything you're doing is completely wrong. And I'm being tough on you right now because no wonder you're stressed. Your fear, you're trading the markets now. You're not a long-term investor. Your fear is impacting you. You're stressed. You're not sure when to get in. You're not sure what to do. And everything comes back down to your lack of training and mentoring of you actually knowing what to look for. So are the two things. One, if you like who I am as a coach, invest good money with my coach. I will set you straight. Give me 6 months with you and I'll set you straight for the rest of your life. But please, the number one thing you should do is yes. Right? The number one thing you should hear. I'd rather not be in the market in a huge drop here. Yes, you're exactly right. But please, I am saying to you right now, YouTube videos are not a represent of telling you what you should be doing in the markets. That is the worst thing to do. Worst thing to do. You only enter the market based off a confidence of a plan of a system of how you, whether it's an investing system where you know, okay, this is a certain amount of money I'm going to put into the markets and this one particular investment here. It's a risk management plan. It's also identification plan as well too. How to identify these good long-term investings. If it's a trading approach where you're looking to get in and get out and so on and so forth. How do I identify these things here? What am I looking for? How do I let the profits run so I can know when to get out for a big profit? How do I cut my losses short and so on and so forth? This is the big thing for you. So I'm telling you right now, yes, one for you, don't be in the markets. That's my recommendation for you is not be in the markets. Because if you keep trading based off your fears and your doubts and your emotions and what you think and your hopes and all this stuff, that one day is going to come home to roost your ass in these markets. And I promise you to the core of me that in 2 years time frame, you're going to come to me and say, I've just lost $200,000 of my retirement fund, not listening to you. Every single investor you know out there, has a plan of attack. If it's a long-term buy and hold of a company, they wait for certain criteria to get into that. And then they have a risk portfolio. Okay, I'm not going to have any more than 5% of my account in this one investment. If it's a trading, same thing. I'm not going to have any more than 5% risk on any given one trade. And so on and so forth. So I hope this really helps you out here. And anyone else that's watching this here that's got a multi-million-dollar fund, again, guys, if you need help with all this sort of stuff, get some coaching. If it's me, again, yes, my coaching is expensive, right? But what's more expensive? Investing in a coach for the next 6 months to get it right, or losing hundreds of thousands of dollars? And that's the whole thing that, again, this millionaire here is going to get absolutely destroyed because he's trading based off all these things here. Again, guys, second link in the description there. Go apply for my stuff here. But if you don't, again, Boogerman, my recommendation for you is to stay on the sidelines until you have some sort of plan that you're confident with. And that confidence may take 3 to 6 months to get to. Right? It takes time. You don't just suddenly, I see a plan, I know what to do tomorrow. No. It takes weeks, it takes months to be able to learn the system, learn the rules, see the patterns and so on and so forth. And it takes time to build that momentum there from there. So my recommendation for you is to stay on the sidelines and be in cash right now until you know what you are doing. If you don't, I promise you, the next year when the recession comes and when you think the market's going to bounce because you're going to be watching a stupid YouTube video saying the bottom's in and you're going to buy the bottom and your account is going to get absolutely killed.